Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Good morning and welcome to the Golden Nugget that happens every single Wednesday on the Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, wherever it is that you're watching from. We appreciate you. We would not have a platform without you. So thank you so much for showing up. Let's talk about what's going on inside of the markets because gold might have just found its floor at about $4,000, and you are seeing that right inside of the title and the thumbnail of this video. And I'm going to show you what is going on inside the markets and what we could be potentially expecting. Now, there's no guarantee that there is a floor at $4,000, but it's sure starting to look like it, right? And I'm going to give you, all of the information and the reasoning and basis behind it so that you can come to your own conclusion there, because it doesn't matter what I think, right? It matters what you know, okay? So I'm going to give you all of that information inside of the Golden Nugget like we do every single week. So first and foremost, to the new people that are here, what is the format of this? Well, first and foremost, we're going to get into a segment called the Commodity Compass. And the Commodity Compass basically tells you everything that's happening inside of the broader metals markets from a verified pro trader and commodities expert at verifiedinvesting.com. Obviously, that's me. I'm Drew Wolfer, and you come for the braids, but you stay for the trades on this show. And that is exactly what we're going to do a little bit later on in the show. Secondarily, what we will do is a special segment that I call the Golden Nugget. And that's where I give you a golden nugget that is a piece of information out of the golden opportunity training that I brought out in conjunction with Verified Investing. And it kind of gives you a little tiny golden nugget from the golden opportunity that shows you exactly how I built my 80+% win rate. Right now it's like 88% or something like that over the past year. It's wild, right? So then what we will do is we will get into our special report, and then we will do the silver snapshot, which is where we do all the TA on silver, and we will do gauging gold, which is where we do all the TA on gold. And spoiler alert, we went 3 for 4 last week. Absolutely amazing gains, absolutely amazing trades, and I will show you what those trades are once we get into those segments. So then we will do the economic calendar, but first we have to jump into our first segment called the Commodity Compass. So what's affecting gold today and in the near future? Well, first and foremost, we had a sharp pullback after an absolutely record rally, okay? Gold recently suffered, and so did silver, if you think about it. Its largest one-day drop in years. Like we dropped like 7-8% in a day from the highs, right? And it was at least 5% depending on where you measured it from and what time zone you're in, right? This was attributed to a lot of profit taking after record highs and hitting almost $4,400, okay? Then the US dollar started to kind of, pump a little bit, getting a little bit stronger. And there was more of a risk-off appetite where you saw, not only like cryptocurrencies, but also equities pumping as well. Now, for traders, this means increased volatility and the need to watch key supports very carefully. But we made money last week where I think a lot of people probably lost money. So if you're on this show taking the trades with us, you are making amazing gains. So I would encourage you to continue watching, and I would encourage you to get into the golden opportunity where I teach you exactly how I developed the win rate that I have. Now, we also have upcoming economic and policy events, okay, which we will talk about at the end of this show. But from the broader markets perspective, there's still a government shutdown. We don't know what reports are going to be coming out. We've got the FOMC meeting next week. It's about to get wild, right? Then we have safe haven demand versus a risk-off kind of recovery, right? Where gold's strong multi-year rally, it actually kind of got underpinned by safe haven demand, giving a nice little floor to it. Then there was obviously inflation fears, central bank buying, which we're going to talk about in our special segment, and geopolitical uncertainty just throughout the world, okay? So if investors start to feel more confident in equities and risk assets like Bitcoin and cryptocurrencies, they may rotate out of gold. And I think that's what you saw when you saw gold just kind of bang, go down. Same thing with silver. And then you saw the stock market go up and you saw the cryptocurrency markets just go parabolic. It was like a 6% move up, right? Now, if a fresh shock hits, we could regain strength in gold and silver very quickly. Okay. Now, we also have earnings week coming up, and that's this week and next week. A lot of big names are reporting. Netflix already missed big on earnings. We have Tesla reporting at the end of the day today. Then, obviously, the FOMC meeting is next week with a rate cut expectation. Now, secondarily, let's get into the second segment called the Golden Nugget. And this is where I'm going to give you a golden nugget from my training and kind of give you a sneak peek of what is in there. Now, the US dollar and its strength and real yields are in focus whenever you're looking at the broader metals markets, especially gold, because we know gold is the largest asset in the entire world, right? It reached an over 30 trillion market cap just the other day whenever it was hitting its all-time highs. First asset ever to do that, and it is now a tier 1 asset, so it can be classified as currency. Now, the US dollar strength is going to be a weight on gold, since gold is priced in US dollars globally. When the dollar strengthens, gold becomes more expensive in other countries, and demand can then get weakened or dampened, okay? So a lot of times when you see the DXY going up, you'll see gold going down. And conversely, when you see the DXY going down, you'll see gold going up because opportunity cost of owning gold is now less, okay? You're going to lose less money by owning gold than you would just being in the dollar. Now, real yields, which are adjusted, the yields that are adjusted for inflation, are rising again and are expected, or they are at least expected to rise, right? This tends to reduce gold's appeal as a non-yielding asset because you don't really make any money on gold, right? When you just hold it and you wait for appreciation. Now, if the dollar continues to rebound upwards, or if real yields begin to climb, gold could come under further pressure, even if broader fundamentals kind of remain supportive, right? And that $4,000 floor could absolutely crack if those things happen, especially if we're really close to that $4,000 floor, right? And that could happen relatively soon. We don't know. We need to see. Now, let's get into our third segment, and that is called the central bank watch. So we have continued central bank accumulation of gold. I think we all know that central banks are still very significant players in the gold market. And according to the World Gold Council, they actually added 19 tons of gold reserves in August of 2025. And that's a rebound from the mere 11 that they added in July, which means that they were buying almost double than what they bought in July, right? Now, when central banks buy gold, it creates a structural demand floor for the gold, okay? For the gold's price. Now, we also have a shift in reserve composition, okay? And what that means is that gold is now gaining more shares. The ECB, which is the European Central Banks, reportedly, they said that gold has now surpassed the euro as the second largest reserve asset after the US dollar. Now, if you were watching a couple of weeks ago, you found out that gold in value is actually more than the US dollar now, which is pretty wild. But gold accounted for about 20% of global official reserves, while the euro was only about 16%. So this is a strong indication and signal that central banks are increasingly viewing gold as a part of a strategic reserve diversification away from those currencies, not just a tactical hedge for uncertainty, okay? Then we have India. Their gold reserves have now crossed over $100 billion, okay, as gold's valuation increased. They're not buying a bunch of gold, but they do have over $100 billion worth of gold at this price, okay? Now, gold share of India's total foreign reserves is about 14.7%, and that's a level not seen since the late 90s, 96 to 97. And what are the motivations behind central banks buying gold, okay? So the drivers behind this behavior are going to include diversification away from the US dollar, okay, and traditional reserve currencies, period, right? Hedging geopolitical risk and financial system uncertainty, okay, and then recognition of gold's role as a non-interest bearing asset that isn't exposed to counterparty risk, okay, that is key, or freeze risk, okay? Remember what happened to Russia whenever they invaded Ukraine, all right? Now, I want to go ahead and get into the silver snapshot. So let's go ahead and talk about what is happening inside of silver. We did get one silver trade last week. It was our one loser. We lost 1.3 or 1.43% on it, unfortunately. And I'll show you what that loss was. It was right here. I mean, You could have taken profit up here. I get that. We were about halfway to our move that we thought maybe we get up to here to about $55.50. This is when it really turned and just went down, right? And then obviously, as soon as we got under the 100 moving average and this previous swing low, that's where we stopped out of the trade. We lost about 1.43% on this, but we also gained about 5% on gold last week. So net positive, and we're in a gold long right now that's actually doing pretty well. So let's talk about the trades. That's the only trade that actually hit last week, unfortunately, right? So we can talk about the trades that are still, in play. And just to get everybody up to speed, anybody that's not been here, okay? We can short at this 1.5 Fibonacci level around $41.17. And I'm purposely going with the ones that are far away so that you can put these on your charts, okay? So then we can also short at this 1.618 level, which is $43.08 if we lose it. That's a prior high, okay? As you can see. Then we have the 1.5 fib. If we come down here and we bounce from here, right, which is a nice little floor, used to be our highs, then we used it as support, we can be longing there, okay? Secondarily, you could long from the 1.618 if you see a bounce there. Again, it used to be a high. We've never revisited it. There is a potential that we bounce from there and then you ride it back up. So you could be longing at $43.09, okay? Secondarily, if you get up here to the 1.786 fib, that is where if you lose this, this is bad news because you've got a double floor here. Bang, bang. Double bottom. This should be pretty good key level support at about $45.82. But if you lose it, you got to start thinking about shorts and writing it down to this prior consolidation zone around $44, maybe even further down to the 1.618 before you start longing at $43.09. Secondarily, and this is where we're going to start getting into the trades for this week, okay? So you can short this 1.786 fib. We were just talking about that, right? But what happens if we lose this 2.0? Well, we actually already got this trade, but unfortunately this happened so early in the morning that I did not get into this trade. So if we come back up here and we retest this and we reject again, especially if we get an SFP, which is a swing failure pattern, and potentially a bearish divergence, that is where you could short down here, short from about $49.30 down to $45.82, okay? Secondarily, if we come up to this 2.236 level, we somehow get through this 2.0 level and then gain all of these moving averages and we reject here and we get an SFP of these highs right here, right? And a bearish divergence, we can start shorting down to wherever these moving averages are starting to kind of lay out. And at the very least, if we're shorting from $53.14, we could be shorting down to about $49.30, okay? Secondarily, if we come down here and we bounce from this 1.786, you guessed it, right? This used to be a nice little floor. Bang, bang. We haven't come back and retested it for a while, so this is going to be pretty key level support. $45.82. You could be longing it right up here to about $49.30. Secondarily, you regain that level at $49.30, the 2.0. You can long it all the way up to this next consolidation zone and potentially these moving averages right around $51.75. And the third trade is obviously going to be right up here. If you get all the way up here and you take out this 2.236 level at $53.14 and you don't get a rejection, and you don't get a SFP and a bearish divergence, you would like to see a new high where you pump up over here. You don't get a bearish divergence here. You come back, you back test and retest this, and then you start blasting off. Now, there is one more trade that I will give you out, and this is one that I'll give you out live. If you SFP right up here, this is where you can start thinking about shorts too. If you SFP these all-time highs right here, bang, as you can see, 10, 22, short, the SFP of the all-time highs, and a bear div, okay? Now, let's gauge gold, okay? Because this is where we killed it last week. This is where we absolutely kill it every single week. We do really good in silver as well, but a lot of our trades are in gold, okay? So let's talk about what we did last week because we absolutely smashed it. But first, I want to give you the other trades so that if you're new here, you can put these trades on your calendar, or not your calendar, but your charts. Okay. So right down here, the $3,430 level, that's where we had a previous double top all-time high, right? And as you can see, that is where we're going to have a value area low and an ascending triangle retest. So if we get down here somehow, this is a key bounce point, $3,450, right? Secondarily, there is an upward trending parallel right here. And if we get down here, we can long the bottom end of this parallel somewhere in the $3,600 range, but I would be less likely to long this, and I would just say revert to this trade right here. This trade right here, which is going to be longing the 2.236 at $3,657. You'll be bringing this all the way back up to about 4K potentially, and at the very least, you'll be bringing it up to about right here at about 38.35. Secondarily, we can start shorting right here at the 2.236, okay? The 2.236 fib is right here, and let me go ahead and label this because now that we've deleted our parallel, we want to say short at the 2.236 loss, okay? So let's go ahead and lock that one in, bang, and we have this one right here. I am going to take the parallel rejection off of here. I don't like that one anymore. I do like this trade. I do like this trade. This is shorting the 2.618 if you get under it, okay? And whoops, I moved to the 2.618. That is my fault. And you're looking to bring it at the very least down to these swing lows right here. I mean, this is a 3.83 risk to reward on this bad boy. So, I mean, this could be a nice little trade, but you'd like to see what happens at these swing lows because you do have the possibility of bringing this all the way down to $3,657. Now, let's talk about what went well last week. Let me pull up my parabolic parallel and I'll show you exactly what we're talking about. Okay, so as you can see, we got this trade, but we're going to talk about this trade last because let's talk about the ones that hit first, right? So we were talking about this trade right here, getting a new high, right? And then no swing failure pattern, no bearish divergence, and then bouncing from the 50 moving average or the 21 moving average and that old high, right? So let's zoom in. I'll show you exactly what I'm talking about. We were back here, right? And we said, look, we need a new high, and then we need to crack this high. This was our high. We need to crack this high with no swing failure pattern and no bearish divergence. And then we need to revisit that old high and bounce from either the 50 moving average, if it's up there, or the 21 moving average, which is this pink line. That's exactly what we did. And obviously, it did not go up to our target. Our target was about $4,400. We did not get that. It was about $4,450, I think was our target, but we didn't quite get to $4,400. And then we just, we just tanked out, right? So we protected that trade on the way down, as you can see, and we took our profits once we got under the 50 moving average. This was about a 1.35% move up, okay? So that took care of our silver loss. But then guess what happened? It hit just right in the same spot yet again, bounced from the 100 moving average and those previous highs, right? Obviously, we had to wait for the bounce to confirm. We did. We waited for the back test of this previous high, right? Because we bounced from the old high. Then this was another previous high. We bounced from there. We got in right here at about the same range, 42.14 to 42.34, and we rode it right back up to the highs, man, and we set new all-time highs. This was like oh man, I mean, this was a crazy, crazy trade. This thing was like a one-day trade, and we made almost 3.5% on this bad boy. I mean, 3.5% in a week on gold is absolutely insane. Obviously, we did not get this trade, just blasted right through our level, and then obviously we got this trade, right? So we came down exactly to the 2.618. This is a level we've been talking about for weeks and weeks and weeks. Ever since we broke above it, we were like, man, if we can just get a back test of this, and we didn't get the back test, and then we just blasted through it. And I was like, man, it would have been so awesome if we just back tested this right here, and then we would have rode this thing all the way up. Well, that's exactly what we're doing now. We back tested it once, we back tested it twice. Here's your top of your parabolic parallel. We are in this trade right now. You had a second chance to get in this trade. This was at market open last night after the shutdown of the markets. I believe this was like 8 p.m. Eastern time. Got in this trade. Absolute monster trade, right? So let's talk about what we can be doing this week as well. Well, there's the obvious one, right? There's the obvious one, which is right here. Long that parabolic parallel and the point, or the 2.618, right? So if you didn't get in this trade, even though we've been talking about this one for weeks, You can wait for a retest, but I would not be waiting for the retest. Like on my trade right now, I'm setting my stop loss under this parallel because this is a free trade. We are not willing to lose on this trade, and we will revisit it and see what happens here, right? So I'll be glad to take profits up here at 41.55. I'm perfectly fine with that. Or I'll be glad to stop out of this trade here because if we start seeing bearish momentum, we might get under this, back test 2.618 and start going down. And that's where we could start shorting, right? We can start shorting right here, okay? If we get under this, bang, we're going to come right down here and we'll say, here's our stop loss, right? And then we would be bringing this down to these prior swing highs, and at the very least, these prior swing highs right here, this nice little double top. But what we would like to do is bring it down to 36.57, okay? Secondarily, if we get a SFP up here, say we're in our long, we get our SFP up here, bang, we can start shorting. We need a bearish divergence. That would be a bonus if we get an SFP and a bearish divergence. And then you just reject from the 200 moving average, which is that green line right there. Secondarily, we can short the all-time highs. If we get an SFP, right, and a bearish divergence at the all-time highs, we can start thinking about shorting and bringing it all the way back down here to these moving averages yet again, right? So if you're in this trade, this long right here, just protect the long, right? At least set your stop loss at break even. Do not get stopped out of this trade at a loss, right? Because, you know, you don't want to be on the wrong side of a momentum shift. We'll see what happens inside of the gold markets, but for all intents and purposes, you have the levels and you have the trade. So let's talk about the economic calendar, right? So today, 10 a.m., we were supposed to have the the JOLTS data, right? I will see if we got that because I was doing this whenever that was supposed to come out. That's at 10 a.m., okay? Then tomorrow, we have the weekly jobless claims. And I have to give just really quick caveat. The monthly jobs and employments report from the Bureau of Labor Statistics, it's already reported not to have been published on schedule, and inflation data like CPI is likewise reported to likely be delayed. Weekly jobless and unemployment claims, those might be suspended and delayed as well because we have the government shutdown, and to be real, they have no intent of ending it anytime soon. So we'll see what happens. Now, tomorrow, we have the weekly jobless claims, initial jobless claims, 8:30, okay? We have existing home sales on Thursday at 10 a.m. We have the CPI at 8:30. Let's see if that comes in, right? That's inflation data. That's going to be a key metric, okay? So there is a potential that we get a flood of economic data one day that is just backed up data that we haven't had for a while, okay? So let's see what happens, okay? Secondarily, we have our S&P Flash Global PMIs, okay? And that is an unconfirmed time right now, but that will likely come out because that is S&P data that is not coming from the government, right? Then on Monday, we don't have anything really, and then Tuesday and Wednesday, we have the FOMC meeting. We have a 25 basis point rate cut that seems to be baked into the price. If they don't give us that rate cut, I would see gold tanking. If they give us that rate cut, it might be par for the course on gold. Anyways, you might still even see a potential type of pullback, but let's see what happens at this $4,000 level, and we will take it from there. And then you have metropolitan area employment and unemployment at 10 a.m. on Wednesday as well. So we will see what happens next Tuesday and Wednesday with the FOMC, and we'll see if what economic data comes out in between then and now. But if you want to understand exactly how I pick out these trades, exactly how we have an 88% win rate inside of the verified investing community, get into the golden opportunity, and I will be glad to see you in there. Thank you all so much for showing up. If you have any questions, feel free to drop them in the comments section. We'll see if we can get to a couple of questions next week, and everybody have a wonderful day.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.